Getting a home loan, refinancing, or extracting equity usually feels like operating machinery from the 19th century. It's a slow, bloated, mechanical grind. The process relies heavily on human-led underwriting. That means actual people are manually hunting down W-2s, checking bank statements, and moving files from one desk to another to verify your financial life. In the real estate market, time kills deals. While you wait weeks for a bank to manually verify your income, the property you want is sitting on the open market, entirely vulnerable to competing bids. This is why the all-cash offer is the ultimate trump card. A buyer with cash in hand bypasses the waiting game entirely, winning deals purely on the speed and certainty of closing. Everyday borrowers are losing out to cash buyers, but rarely because they lack the necessary funds or credit. They lose because they are trapped in a lending system structured to delay them. That mechanical delay is the exact problem a new product called the 5x5 Home Loan is trying to solve. It acts as a direct bypass to the traditional timeline. This diagram shows a standard 30-day calendar cycle running parallel to a highly compressed timeline. The 5x5 is structured to deliver approvals in as little as 5 minutes and full funding in as few as 5 days. By shrinking the waiting period down to a few days, a borrower looking to utilize home equity or finance a purchase suddenly has leverage that competes directly with the certainty of an all-cash offer. But speed requires mechanics. How do you actually engineer a lending system to compress a month-long mortgage process into just 5 days? To achieve that kind of time compression, you have to abandon the old manual pipeline entirely. You need a different kind of underwriting engine, and in this case, it comes from a company called Figure Technology Solutions. Figure builds its financial infrastructure on blockchain rails. This allows them to process loans using a fully automated system rather than relying on human verification. Instead of a sequential path where humans manually verify documents step by step, the automated path uses a digital ledger to confirm data and apply lending logic simultaneously. By removing these human bottlenecks, friction points disappear entirely, resulting in a massive drop in cycle time. And when you strip away the manual labor required to underwrite a loan, you drastically lower the cost of actually fulfilling it. Figure has successfully engineered a frictionless processing engine. But a fast engine sitting in a lab doesn't do much good. To reach everyday borrowers, it needs to be installed into a massive commercial chassis. That chassis is loanDepot. As a national retail lender, they already have the scale and the customer base required to put this new engine on the road. Figure's proprietary underwriting engine slots directly into loanDepot's existing Mello platform. This integration gives the software a physical footprint, covering all 50 states, distributed through an enormous human network of nearly 1,800 licensed loan officers, holding about 12,500 state licenses. This network of licensed officers takes complex blockchain automation out of the tech sector and places it directly into the hands of retail consumers looking to buy a home or tap their equity. It is a precise symbiosis. Figure provides the agile technology to process the loans instantly, and loanDepot provides the personnel to distribute it at scale. The old grinding pipeline we looked at earlier has been completely bypassed. By wiring these two systems together, loanDepot and Figure have built an express path. For consumers, the benefit is entirely practical. Whether you are extracting equity or refinancing an existing mortgage, you avoid waiting a month for the bank to finish its paperwork. You operate with the leverage of a cash buyer. For the lenders, the math is equally compelling. By materially reducing the cost to produce each loan, they can chase profitable market share growth even in a tight economic environment. Integrating an automated ledger into a traditional retail point-of-sale system establishes a structural baseline. It proves the plumbing works, opening the door for entirely new loan products down the road. In a market defined by speed, having the digital infrastructure to move capital in days shifts the competitive advantage, ending the structural necessity of the 30-day wait.